Okay, so we are ready. Welcome. Happy Monday, everybody. It is Monday, June 9th. Positive thought for the day. Learn to be happy with what you have while you pursue all that you want. And that is motivational speaker Jim Rohn. I like that. Be happy with what you have. And I think in this market environment, how that relates to trading is if we have not really knocked the ball out of the park, but your accounts are growing and you're seeing positive results. Don't be in a haste to turn that into a $5,000 account into a $1 million account, because those are we need different market environments for that to occur. But overall, this I think positive thought for the day is that as we learn techniques, and what we are pursuing here is to be skilled traders, to be able to trade in all market conditions and not have significant drawdowns. And remember, every trader will go through a period of a drawdown or a bad call in the market, and as long as you just do not do what many traders have done in the past, and that is when you're wrong, always be in 100, and when you're right, only be in 1. It's the old floor traders adage that I like to. So again, I think what it really boils down to is coming in, doing your homework, and being prepared. This past weekend we had our mentoring first week session, and it was we got really excellent reviews, and people were just really pleased with the material. So I'm happy that we are doing this. It's on Saturdays, and it's just been, I think, a good refresher, and I'm excited about the material that we're getting into in the nitty-gritty. And with that said, a lot of the techniques and everything that we talk about in planning and scanning, I think is a part of where we get those outlooks is from the style and the technique and that we're teaching in that mentoring class. So with that said, let's just look at what happened last week. All stock indexes closed higher in the week, new highs in both AD and on-balance volume, new upside targets in ES. Next one is going to be the monthly pivot at 1966 and then quarterly pivot at 1978. The Russell triggered that weekly last conditional change breakout when it closed over 57. And it does project to newer highs or to test the highs. The spiders, the Russell, the NICE, and the Dow all left daily gaps under Friday's lows. Now that's important, and I'm going to talk about that in just a few minutes. Last week's comments, I said the McClellan oscillator on both daily and weekly time frames suggests more upside. All right, so we got the upside. I think we should be still focusing on social media and tech names within the MSH sector. And stocks to watch include Amazon. Boy, that was an understatement, right? That's what our comments were last week. Apple, Facebook, Google, MSI, IBM, Aruba, and Plantronics. Friday's close for this week. Friday's close, the daily McClellan oscillator suggests we're closer to a little overbought, and so we're looking for a pullback this week. But we didn't get that reading on the weeklies, suggesting that we could have. And here's how I'm reading it. If we can get some early week strength out of the market and just a quick pop to the upside, I think that will get our daily readings overbought. And you know, if we maintain that towards the middle of the week, I think you got a mid to late week correction coming. And that's what the McClellan oscillator suggests. It's kind of like the AD lines, right? Everything is very, very strong. It's so strong, what else can go up kind of thing. It's a little on the overbought levels right now. And not from a price perspective, because prices can stay overbought between now and 2020 if they want. And that's according to the stochastics indicator until things turn around. We still are following our seasonal trends. Weekly signals. We had weekly high closed dojis, BSX, Fastenal, MDT, Teradyne, and Adobe, Semantic, Verizon, and Diamond Offshore Drilling gave weekly low closed dojis. Potential swing trades. I'm looking at credit call spreads, even though implied volatility is light. I think I'd rather do a credit call spread for July expiration on rallies near 66 to 78, somewhere in that zone. So if we get to like 72 somehow, right, a 20 handle rally more, and if it's early in the week by Tuesday, that's pretty much early in the week, middle of the week's Wednesday, so somewhere up in that region, if we get there, I don't care. I'm doing a credit call spread, and the reason is, even though implied volatility is light, I just don't think we've got a huge correction coming. Maybe we only get back to like, 25, 20, something like that. The point of where I thought the market would get to was 20, and we obviously cut through that with a hot knife through butter, like it didn't matter. And so for wherever the market stalls at the next resistance level, it will want to come back and to revisit that old target 20s. So that's why I say if you get up into the 60s, the 70s, I mean, this is just a game plan. Whether it happens or not, I don't know. But if it does, this is what I'm following up with my game plan. If we do get an early week correction or a late week correction, I will be getting out of those directional puts. But the reason why I think that this is a pretty good position, and I'll be putting this out for newsletter subscribers, because I just think that the market will be due for a correction in nature, that maybe we don't see a big sell-off, just a quick one, but we could just chop around and collect some theta as we get into July. So that's why any higher of a move to the upside, I'm looking at the credit call spreads. I understand the implied volatility is not great, and I understand it's not the ideal strategy for this low vol environment. However, I think the probabilities of success outweigh the amount of what I could collect. So we've got some game plans in store for this week. All right, we got the euro weekly low last conditional change candle needs to give us a close above 37.34 for further upside. Bonds, if we get a close below 34.14, that's going to give us a low last conditional change. And the yen, a daily last conditional change above 97.84 propels the yen a lot higher. We did a big in-depth study on the Japanese yen as it related to the commitment of traders report, seasonalities because that was the focus of week one, seasonals and commitment of traders. And the Japanese yen has quite a surprise with the amount of public that is short that market. Gold, we've got resistance in gold at around 12.78 if it's possible for the market to get up there. And then finally, crude oil. We've got a weekly last conditional change if it gets anywhere below 101.52. I want to talk about Blackstone, BLK. Blackstone, I think there could be an option strategy to discuss this week. So Blackstone, to me, looks, this is a hedge fund that is in home flipping business. They are into foreclosure buying. They have crews and teams that, at least down here in South Florida, I have friends that are in that business, and they are making money like it is sick, ridiculous. I mean, they're buying 220 homes, putting 80 into it, and they're flipping them for 540, 560, 600 even. They're finding foreclosures on canals with boat lifts and homes with swimming pools and picking them up for 220. But a lot of these guys that have been doing this for decades for a living have been finding it difficult and difficult. They keep getting outbid at the courthouse. And who's the number one person or entity that's buying them out? It is Blackstone. And you could probably Google this information because they're in California, they're in Vegas, they're in Atlanta, Blackstone, but they're not just a hedge fund or an investment group that is solely in equities. So I think it warrants taking a look at Blackstone for this week. It had an interesting chart pattern. Also, BSX. BSX is an interesting trade, looking to buy on a pullback of 1302 with a 1242 stop. And again, our potential seasonal commodity spreads, which I want to go over real quick here with us. All right, so let's go over to pages. Pages, if you have Genesis, go to your meat page. And load the new page. I'll show you exactly what I'm referring to. Lifetime subscribers get this feature, and it's pretty cool. So as it relates to trades in meats, if you go up to your two pages, and let's go to meats, and let's load the new page. A little window will come up. and go down to where you see meats, import it. All right, and then next, so if we, how does the meat page, how does it relate to this? Well, we had a buy December live cattle, sell December lean hog on or about 6/6, and you hold that through 8/18. All right, so that's kind of a longer term spread. So if you look at your meat page, we're looking for long Dees live cattle, short Dees lean hog. So if you look down here, you'll see where it says now it's been loaded. LC, you'll see 2014-12. That stands for December live cattle. The one that you're going long goes first. Always buys go first, sells go second, unless you're in an intra-market where you're selling one commodity against another, like selling corn, selling wheat. They're two different products. But what we wanted, that's just two shorts. Always for a spread, you're buying one and you're selling the other. So when it comes to buying live cattle, selling Dees hogs, let's take a look at that spread, and that would be right here. If you're long a spread or you're long a market, you want price to go up, right? If you're long, you want price to go up. If you're long and price reverts lower, it's not a winning trade. It's a losing trade. With spreads, remember, we always are looking at a line chart because you got to take the closing price of one product versus the closing price of the other product, whether that's a 5-minute chart, 15-minute chart, because again, it's on the trades, it's not on the bid and the asks. Two different markets have two different bid and asks, and you got to plot them as they trade. So you're always looking at a line chart when you do spreads. All right? Now, we talked about doing this on or about the 6th. This spread was actually bottomed out on 5/27. It broke out of this longer term range, as you can see. It broke out of the last peak high over here, and it did so on or about the 4th. It rallied going in on the 5th, and on the 6th it pulled back. All right, so this particular spread, this is a weekly chart. In a seasonally weak time frame, the spread was trading at around 48 cents and 48.5, which means cattle was 48 cents higher than hog prices. So you want this spread to widen at this point in time. Now, the spread should start to see some bullish patterns. Higher lows, which we are now getting, and higher highs, which we are getting. Now, what about risk? You never want to see the market close below the prior low. So I don't want to see whatever the time frame. This is a weekly chart. So, I mean, obviously, if this market goes and if we can get a pullback, I would suggest somewhere around the 50, somewhere between 50 cents and 50.5. Somewhere in there, I would like to be a buyer of the spread, and I don't want to see it close underneath that low. Now, this is a position trade. That's $730 if we were looking to be a buyer somewhere into this level right there. Now, that's a weekly chart. Let's take a look at a daily chart. What are we looking at? We're looking at this market to get back, and that seems reasonable on a daily chart. It does seem reasonable that over time we can get this market somewhere, into this range, possibly down into here, right? It would still be a higher low. We want to make sure that we don't take out this low level on a spread chart. So this is not a swing trade. This is a longer term position trade if you're interested. But if you don't want to take it and you just want to, like, maybe this year just start practicing on spreads, that's fine. Anyway, I just teed that all up for you, and that's how we get it. That's how you find it, and that's the strategy there for the long cattle, short hogs. Next, we had a buy August feeders, sell August live cattle on the 8th. That's this week. And that's this spread trade here. And as you can see, if you're buying the feeder and you're selling the August live cattle against it, the spread needs to go up. This spread is a little scary this year because it's an abnormal situation. This thing has already rallied substantially. I'm not sure what's kind of left in this thing, but the risk parameter, it's a little wild and woolly, and the risk parameter on this seasonal trade is not something that I would be interested in personally. All right. For example, if we were in the beginning of a seasonal trend and we were bottoming out, and I could see higher, like I want to see with the cattle hog spread, where I get consecutive series of higher highs, higher lows, and it's starting to base out, right? I don't want to buy a high close doji kind of like. It's like the concept of buying a high close doji after a 1,000-point rally in the Dow. You know, it's like, wait a minute, a high close doji, I'd probably, after a 1,000-point rally in the Dow, I'd probably be looking for a low close doji, not a high close doji. And that's the same concept here. But nonetheless, I want to see personally if it is adhering to its seasonal tendency. This is a very short-term trade anyway. This actually only works until June 23rd. That's interesting, because if this thing actually does work and moves a little bit higher, and it ends on the 23rd, wouldn't it make sense that possibly we look for the reverse of this spread on or about the 23rd, meaning we would buy August live cattle and sell August feeder cattle and look for a pretty substantial correction? So that might be a better thing, but I just wanted to list all the potential seasonal commodity spreads, and I did that last week, and I wanted to review them on Monday's planning and scanning for today. All right? So that is, and again, this has been recorded, so you can review this recording. Next, let's go over to the grain page real quick. And as this switches over, all right. So on the grain page, we have an interesting strategy here. We're buying May corn, selling D's corn. That's later in the month, but we're also buying D's wheat and selling D's corn later in the month. About the same time, corn, corn, wheat, wheat. So if we take a look at this, you'll note that the wheat-corn spread, I've already got up here, but it's not the right month. Notice that we've got, what do we got here? We've got D-sweet. No, we got the spread up, right? Absolutely. All right, so we did get this right, but I want to make sure if I go to pages, I got a grain, I want to load shared pages. And we go over here, and I'm going to find my grain page and import it. Wheat, corn, and there it is. All right, so we have wheat, corn spread the way it should be. And as you can see, this now says wheat long on the long side 2012, corn long short side 2012. So if you're going to be buying wheat and selling corn, you want the spread, the black line, to start pointing up. Now, interesting aspect is we just kind of formed a little bottom in here in the corn wheat spread early in the month, 20 days early in fact. So maybe perhaps we get some choppiness back and forth. The funny thing is we got an event, a catalyst that may cause this market to go back and forth a little bit, and that catalyst would be the USDA crop production report that's coming out Wednesday at 12 noon. So wheat prices, as we could see here, this is wheat. We were looking to buy it in the newsletter a little bit lower, which we might get, right? The rally here, they're having a hard time sustaining moves in wheat. So wheat and grain prices typically form kind of bottoms before they accelerate. Very rare do we get the V bottom. It's not, it's more of a rounding bottom, a choppy bottom. Typically, you know, the market bottoms, tests the low, rallies, comes back. You know, it just lingers, right? It lingers for a while. This hasn't lingered enough. And so I think it really needs to chop around a little bit, and perhaps Wednesdays get that report out of the way, and then we go back to looking at the seasonalities for the wheat for the long side. That would conclude our, and we got the natural gas, which is the natural gas, that's a bear spread. And I did not put that spread up on any page quite yet. I guess I could, but if I did, it would go under RS spread charts. But I want to get to RS, which is relative strength anyway, and I want to go over our comments here in regards to the McClellan oscillator and share that with you. So with that said, here we go. Here's the McClellan oscillator, and this is a daily chart. And you know, this red line in past times has given us corrections, earlier warning signs of corrections. As we get near, I mean, throughout time and history, and if we kind of tee this up a little bit, get a crosshairs, you know, right before the market hit that level, we saw correction in the market. We saw a little correction in the market. We saw the market went through that period of correction. Here's another little reading here, and it went through a correction in the market. The January sell-off, March, it had that little correction in nature. Then you had that little correction down here. So that red line, it's not 100% perfect, but a lot of times it's early warning, right? These are daily charts, so 3, 4, 5 days later, you got a correction in the market. So we are near a corrective level in the sense of amount of stocks, according to the McClellan oscillator. On a daily basis, we're getting nearer an overbought reading. Now, how does that relate to a weekly? Well, the weekly isn't quite at a significant major overbought level, but we are making higher highs in price and lower highs in the McClellan weekly reading. So you still have to be on guard for a potential bearish divergence. But I think for a longer term analysis, it's more reliable to look at the McClellan oscillator on a weekly overbought. That's why I said if we got early week strength, and we've got the daily oscillator, and if the weekly oscillator rose, then I'm pretty much more comfortable with the fact that we're closer to a correction rather than further away from the correction from this indicator, one indicator least used by the masses. All right. So with that said, for today's planning and scanning, I think we have still wanted to go over some of those commodity spreads. Let me go over Blackstone with everyone real quick here. BlackRock, excuse me. What did I say? Blackstone. Why did I say Blackstone? So this is a pattern on a daily chart, and what I wanted to discuss is taking a look at this weekly. We got into a very significant pause trend sideways, and now we're starting to break out, and we had this little high closed doji on some fairly decent volume. And the funny thing is, if you look at like this seasonal aspect, it tends to bottom in June and then has a little rise going into July. So Blackstone might be on any early weakness pullback to 308 or so, 305. I'm going to be looking for a any type of correction in here. I'm looking for a bullish option strategy. We definitely have a gap in in the overall benchmark indices. Remember that we talked about. It's actually in our. So I think that the market has a shot of a pullback, and if Blackstone can kind of get back down into maybe, like I said, 308 on a weekly chart, look promising, 307, 308.90, somewhere around in that region, I'm going to be looking and digging forward to see what option strategy might be best suited for this, because it starts to begin. It has a seasonal week period this week, and if it does pull back, I think this one has a shot. And you know, being a large capped stock, BLK, meaning $300, this thing could really rip to the upside from a, you know, even a 5% move is a $15, and 5%, this thing you know, if you think about it, a 5% move is $15. Where would that put you? New highs. And this market is looking, that volume accumulation, you had trend consolidation and it enters a seasonally strong period of time, boy, this thing could really rip to the upside. So that's why I think Blackstone has some upside, major upside potential. Today we have Apple's new pricing, which will be strange, and it just happened on the opening. So we have the regular session that has just opened, and we have Apple that is, everyone I think will be probably talking about Apple, but if you think of Apple in the sense that, you know, at the 450 handle, right, is, you know, about 90 bucks, 7 times 9, 560, we're at $92, right? So we're not going to see that $700 mark, but I'll tell you what, in old pricing structure, Apple is getting near, and, you know, I think if it wants to try for $100, it's going to be tough immediately. I think 95, 97, we've got $94, by the way, in Apple. $94 is a, in fact, instead of talking about it, let me get it up for you. Oh, Genesis hasn't done it yet. Oh, Genesis, really? All right, they haven't done the post-split price. Maybe I can edit that. Well, they'll probably get on it later than sooner. TradeStation actually went back and did it, and I haven't had a chance to look at Thinkorswim quite yet. But in any event, I've got, if you believe me or not, I got 94 bucks as a resistance, and on a daily chart, last conditional change breakdown on Apple on the new pricing. If we get a daily close under 90.87. Let me type that in there. 90.87 would be an LCC breakdown. I'll share that with you guys later today. I guess you get the impression I'm not all that bullish on Apple at this level. And I think that, you know, anyone that wants to buy it, they're letting them in. You know, when it's interesting because even you can either give this another day or so, or wait for that last conditional change, or look for any rally near 94. But it's definitely running out of steam, and the on-balance volume does not look healthy here. Let me share with you with what I'm looking at. How many people are interested in Apple and want me to go a little bit more? Okay, just about everybody. Wow, all right. The next thing I wanted to discuss was also the knob spread. A rally up to 1116 somehow, somewhere. We are now making lower lows, but we have kind of a range. So, in other words, we had a higher high and we got lower lows. So any rally up in here, there's 1116, and the next time we break down, that would be a rally, a failed rally test, and you want to be short the knob spread, and you got to be in September contracts. So, I'm so glad this was recorded and everyone caught me singing. Oh my goodness, what did I just do to my career? I know I'm not going to start a singing career. All right, I'm switching platforms projections. Bear with me, we went dark for a quick second. All right, so what they do is they just, divide the price and the indicators by 7, and as you can see, we got a nice trend run in Apple. Nice little move to the upside. We had all this consolidation. We were talking about Apple the other week. If it got up to 532, we were starting to see a little bit of, the momentum waning. For a day or two pullback. It went to like 35. It did get a day or two pullback, and then it surged straight up as people were positioning for, of course, this event. So now you have significant higher highs. You're near this 94, which is a target resistance. It was also last time period's resistance based off of the new pricing structure. Look at the on-balance volume. Newer highs and lower readings. Interesting. So if you note that the last conditional change, in fact, let's go, I've got them off, and let's see if I'm right. Yep, there it is. So the TradeStation, we have been able to program the last conditional changes I make mention, and as you can see, the white line, the gray line would be a last conditional change which started on this bar because this closed below that low. So this would be a last conditional change. So it gives you the gray lines until it's violated, and it was, and it stopped going forward. This is the last conditional change, the bullish last conditional change. It's this candle, which is that white line. So you either look for some selling up in here at around 94, or you look for potential daily close and a sell signal underneath 90.87, and that's Apple. And I think that this, if you do get a reversal in here, it's going to be kind of an important reversal in the sense that this market has had an incredible run to the upside. No one loved it, in the old pricing at 530, but now everyone loves Apple. All of a sudden, it's amazing how people forget about things. Anyway, even the person histogram is showing a divergence on that momentum, and so there it is. Okay? And that concludes today's session.